BigBear.ai Holdings is one of the more interesting small-cap artificial intelligence companies in 2025. While not as famous as NVIDIA or Palantir, the company is carving out a niche in AI-powered decision intelligence, a field that combines data analytics, machine learning, and predictive modeling to help governments and large enterprises make complex operational decisions faster and with greater accuracy. BigBear.ai primarily works with the United States Department of Defense, intelligence agencies, and national security organizations, but it's also expanding into commercial applications, from logistics and healthcare analytics to smart manufacturing. Let's start with the numbers. In the most recent quarter, BigBear.ai reported revenue of approximately $32.5 million, down about 18% from roughly $39.8 million in the same period last year. That drop in top-line revenue raised some investor concern, particularly given that the artificial intelligence sector overall is growing rapidly. However, the company attributed much of that decline to timing in contract awards and delays in certain federal programs, rather than a structural decline in demand. The bigger headline, however, was the net loss. BigBear.ai posted a loss of around $228 million for the quarter, significantly higher than the prior year. That number was largely inflated by non-cash charges, specifically goodwill impairments and revaluations of derivative liabilities. But it still reflects the company's ongoing challenge in scaling its operations profitably. Gross margins came in around 21%, consistent with prior quarters, which shows that profitability improvements will need to come from scale and cost optimization rather than pricing alone. On a positive note, BigBear.ai ended the quarter with roughly $390 million in cash and long-term debt of about $140 million, leaving it with a net cash position of approximately $248 million. That means, unlike many small-cap AI firms, BigBear.ai is not in immediate financial distress and has enough liquidity to continue investing in product development and strategic initiatives for several years without needing to raise new capital in the near term. The company also lowered its full-year 2025 revenue outlook to between $125 and $140 million, compared to earlier guidance of $160 to $180 million. That revision disappointed some investors and caused short-term volatility in the stock. Still, BigBear.ai maintained that its long-term opportunity remains intact and pointed to a total contract backlog of roughly $400 million, representing future revenue potential across government and commercial clients. So, what exactly does BigBear.ai do that differentiates it from other artificial intelligence companies? The firm's core value proposition lies in its decision intelligence platform. Essentially, BigBear.ai ingests massive amounts of data from multiple sources, cleans it, and runs advanced predictive analytics and machine learning algorithms to provide actionable insights. This is especially useful for mission-critical scenarios. For example, predicting supply chain disruptions, analyzing satellite data for defense operations, or optimizing military logistics. The company's tools can also be deployed in commercial sectors like manufacturing and healthcare to detect inefficiencies or predict outcomes before they happen. One key driver of optimism is BigBear.ai's growing work with the US government on defense modernization programs. The Department of Defense continues to allocate significant funding to AI-driven situational awareness and battlefield intelligence solutions. BigBear.ai has established itself as one of the few vendors capable of delivering both classified and unclassified data analytics within secure networks. These capabilities create high switching costs and strong barriers to entry for competitors, meaning once BigBear.ai embeds its systems, they tend to stay for years. Another positive development is the company's expanding reach into enterprise analytics through partnerships with private sector companies looking to integrate AI into their operations. While government contracts make up most of BigBear.ai's revenue today, the commercial market represents a much larger long-term opportunity. Management has hinted that part of the company's strategic plan involves shifting its revenue mix toward recurring software and analytics services, moving away from one-time project contracts. That transition will be critical for long-term scalability and margin expansion. However, there are still real challenges. BigBear.ai's execution has been inconsistent, and the recent guidance cut reinforces investor caution. Even though it sits in one of the fastest-growing industries in the world, competition is intense. Larger players like Palantir, C3.ai, and even Microsoft's Azure AI division compete for the same enterprise contracts. Meanwhile, smaller firms are popping up with specialized solutions, creating pricing pressure. BigBear.ai's advantage is in its deep defense relationships and analytics expertise. But scaling that into sustainable growth will require flawless execution and clear proof of commercial traction. From a financial standpoint, investors should view BigBear.ai as a speculative play, one that offers potentially explosive upside if management can deliver, but carries high risk if execution falters. The company's path to profitability remains uncertain. Operating expenses are still high relative to revenue, and while the cash balance provides runway, the business will need to show meaningful progress in generating recurring revenue to justify its valuation over the long term. Still, the stock remains intriguing because of the broader environment. Artificial intelligence adoption across defense, logistics, and enterprise analytics is accelerating. Governments worldwide are investing heavily in predictive analytics, cybersecurity, and AI-powered decision-making systems. BigBear.ai's specialized experience in defense analytics and national security could give it an edge in securing more long-term contracts as AI becomes integral to defense infrastructure modernization. In summary, BigBear.ai represents a classic high-risk, high-reward scenario. The technology foundation is strong, the total addressable market is enormous, and the company has the liquidity to survive its current restructuring phase. The main question is execution. Can management convert backlog into steady revenue, grow margins, and establish recurring analytics income streams? If the answer is yes, the upside could be substantial. If not, the company could remain a speculative micro-cap story that fails to scale. Based on the current balance of risk and reward, I rate BigBear.ai as a speculative buy for investors with high risk tolerance and a long-term outlook. This is not a stable dividend stock or a predictable growth story. It's a bet on execution, contract expansion, and the continued rise of AI in national security and enterprise analytics. Investors who believe in that trend may want to keep BigBear.ai on their watch list or take a small position as a potential asymmetric opportunity. If you enjoyed this breakdown and want to stay ahead of the next wave of AI-driven investing opportunities, make sure to like this video, subscribe, and hit the bell icon so you don't miss future deep dives into emerging technology and small-cap growth stocks.